Hi everybody, it's Terry Ryder from hotspotting.com.au. On Saturday I appeared on the Your Money program on Foxtel, a program dedicated on Saturdays to talking about real estate markets across the country, and they asked me to come on and talk about the subject of what's really going on in property markets around the country, how I saw various markets performing over the next 12 months, which areas would outperform and which ones would fall behind, and also they asked me to compile a top 10 list of locations that I thought are going to do well next year. So I was more than happy to do that, and in terms of the big picture forecasting, they're asking me to talk about which markets I thought were going to do well, which ones were going to fall behind, which ones were going to slide sideways. So in simple terms, my general prognosis for Sydney was that the current price decline would continue in a fairly orderly fashion until about mid-year and start to level out. I noticed that Domain is making a similar forecast. Regional New South Wales, however, is doing something very different to Sydney, and I'm expecting solid to strong price growth in markets like Newcastle, the Hunter region, Orange, Tamworth, Queanbeyan, just outside Canberra, is a very, very strong and rising market at the moment. And steady places like Dubbo and Wagga Wagga. Lots of growth markets in regional New South Wales at the moment. For Melbourne, very similar to Sydney, orderly decline in prices. As a generalisation, it's worth noting that the outer ring areas of Melbourne still have pretty solid price growth going on. It's not like prices are falling everywhere in Melbourne. It's primarily at the top end. The middle market is holding up fairly well. There's sort of, generally speaking, moderate decline there, and the outer ring area is still some pretty solid price levels being attained. But next year, expecting that general situation of orderly decline in Melbourne prices, with the overall median coming back to continue, and like Sydney, to sort of level out mid-year, and we perhaps see a return to moderate price growth after that. And also, similar to New South Wales, regional Victoria doing very different things to Melbourne. Some of the strongest markets in Australia right now in regional Victoria. And what I said on the Your Money program on Foxtel on Saturday was that I expect strong price growth in regional cities such as Ballarat and Bendigo, following on from what we've already seen in the last 12 months in places such as Geelong, Warragul, Pakenham, Officer. For Brisbane, expecting sort of moderate to solid price growth in parts of the Brisbane market. I expect Brisbane to do better than it's done in recent years because many of the economic ducks are falling into line. Population data starting to favour Brisbane again, but not the inner city apartment market. That's still one to avoid. Vacancy still pretty high in the Brisbane CBD and near city suburbs like Fortitude Valley. Regional Queensland, it's yet another case where the regions are outperforming the capital cities. It's no doubt that the Sunshine Coast is the strongest market in Queensland at the moment. Mackay is leading the recovery of central Queensland markets have been impacted adversely by the resources sector, and expecting a return to moderate growth in cities like Townsville, Cairns, Rockhampton and Toowoomba. In Adelaide, expecting solid to strong growth. It's the most underrated city in Australia, a much stronger economy than people realise, and I'm expecting bigger and better things from Adelaide next year. The top end is already moving strongly. Similar story in Perth, although Perth has been in downturn, whereas Adelaide's just been chugging along, showing a small to moderate growth each year for the last 4 or 5 years. Hasn't boomed, but I think it's going to do better next year, whereas Perth has been going backwards because of its local economy. The Western Australian state economy has been weak. It's been in decline, but Perth's on the way back in terms of its property market. First signs of recovery were seen earlier this year. The top end has moved quite strongly, and we're starting to see the first signs of price growth across the board. Vacancies much lower than they were. Canberra, always a solid market, expected to be stronger next year. It's got some of the lowest vacancies in the country, some of the strongest rental growth amongst the capital cities, and pretty solid sales activity. So expecting Canberra to be one of the better performers in 2019. Hobart has been the #1 capital city in terms of price growth this year. Expect it to still be showing growth next year, but there's no doubt in my mind that Hobart has passed its peak and that the rate of price growth in Hobart is going to be less as we get into next year. And Darwin, well, we're probably going to see the first signs of return to some sort of growth in Darwin. It's been very much in the doldrum. It's been the bottom-ranked market amongst the capital cities in the last couple of years. Still looking a little bit sick, but I noticed some of the price indicators are starting to turn positive for the first time in quite a few years for Darwin. So we may see better things from the Darwin market next year. So that's a fairly general synopsis of what we're expecting to see in markets in Australia next year. Continuation of the current moderate, orderly decline in Sydney and Melbourne, but levelling out sometime next year. But other parts of the country, we're going to see much better things with the smaller capital cities in regional Australia being the outperformers. Now, they did ask me when they invited me to appear on the Your Money program on Foxtel to nominate top 10 list of suburbs that are expected to do well next year. So I chose suburbs that were indicative of broader market trends because I don't believe that individual suburbs stand out. It's very rare. People keep asking, what do you think this suburb's going to do, that suburb? We don't think in terms of individual suburbs at hotspotting. We think in terms of precincts or local government areas because it's very rare for one suburb to stand out and do something that the other suburbs around it aren't doing because they're all influenced in many cases by the same factors. So, but people keep asking me for which suburbs do you think are going to excel? So I picked 10 suburbs according to the patterns we're seeing in our research for the Price Predictor Index, one of our most important reports. And I picked 10 suburbs that were representative of wider trends. So the first of them was Cottesloe in Perth. The reason I chose Cottesloe is because there's strong evidence that demand is rising there, as it is in the top-end markets in Perth generally. What we've seen is that the $1 million suburbs of Perth have had pretty good price growth in the last 12 months. Many of them have had double-digit growth. Cottesloe is one of them, and we've also seen steady increases in the number of sales. Demand is rising in Cottesloe, and it's a representative of the top end of the Perth market moving. And we believe that that top end is going to lead Perth's recovery in 2019. The next one was the suburb of Golden Square in Bendigo. Again, an example of a broader market. Bendigo is a market that's rising. It's getting buyers out of Melbourne, home buyers and investors because of its affordability and because of its strong local economy. And Golden Square is one of those affordable suburbs that's got rising demand. The next one I nominated was Kippa-Ring, a suburb on the Redcliffe Peninsula in the north of Brisbane. Brisbane's going to do better. Kippa-Ring is a suburb on the Redcliffe Peninsula, which is an affordable lifestyle market up in the north, which has a lot going for it, including the new rail links. And so I think it's going to be the rising demand there that we're seeing is indicative of a gathering trend for Brisbane, particularly the affordable northern suburbs. The next suburb I chose was Lena Valley and Hobart. Hobart, as I said, I think in demand terms it's past its peak. We're starting to see the sales levels sort of plateau out, no longer rising strongly, but prices take time to react to that. So we're going to continue to see strong price growth in Hobart. We're still seeing houses selling very, very quickly, in fact more quickly than anywhere else in capital city Australia at the moment. And Lena Valley is one of those suburbs where we're seeing a pattern of still rising demand, although in Hobart generally that's no longer the case. The next one on our list was the suburb of Lightsview in Adelaide, and Lightsview is a suburb of the Port Adelaide Enfield local government area, which is in our research is the local government area that has more suburbs with rising demand right now than anywhere else in Australia, indicative of what's happening in Adelaide. And Port Adelaide is a market on the move. Lightsview is an example of that trend. Lots of suburbs, smallish suburbs with median prices, say in 400,000s, 500,000s, emerging lifestyle around the port, and of course the big kicker is the $90 billion worth of contracts to build vessels for the navies, which is all happening up there and just getting underway. The next on my list was Minyama and Sunshine Coast. Now that's a canal residential suburb at the top end of the Sunshine Coast market. There's no doubt that Sunshine Coast is the #1 market in Queensland at the moment. Most of its suburbs have had double-digit growth in their median prices in the last 12 months, headed by Minyama, but it's really right across the board. The Sunshine Coast economy has just been evolving really strongly from what used to be a tourism-based economy to what's now much broader and stronger, headed by the major new medical precinct based around the $2 billion hospital that's now up and running. So expect a continuation of strong things from the Sunshine Coast property market in 2019. Then another location in Adelaide, Mitchell Park, which is a suburb of the city of Marion down in the south, the sort of southern middle ring suburbs of Adelaide, close to the Flinders University, close to the Flinders Medical Precinct, and close to the Tonsley Precinct. Lots of big jobs nodes close to suburbs like Mitchell Park, where you can buy in the sort of high 300s or low 400,000s. And you can probably find properties there that have the potential for further development or value adding. So it's really one to watch, I think. The next on my list was Queanbeyan, just outside Canberra. It's technically in New South Wales, but effectively it's part of the Canberra metropolitan area, so it's got the best of both worlds. A little bit more affordable than downtown Canberra, but very close to central Canberra because of the way the line on the map, the border between the ACT and the New South Wales state works. So if you're a first-time buyer in Canberra, you can slip across the border, get the incentives and concessions available in New South Wales, buying Queanbeyan, but still be pretty close to the centre of Canberra. So that market is definitely rising, and we're starting to see good price growth in that market. The next on the list was Rutherford, which is a location in the Hunter Valley in New South Wales. Hunter Valley is certainly a market on the rise. Newcastle has probably been the #1 market for price growth in New South Wales in the last 12 months, and that situation is now rippling out to nearby areas like Port Stephens, the suburbs of the Lake Macquarie local government area, and in particular out to the towns in the Hunter Valley like Cessnock and Maitland, Singleton, Muswellbrook. But Rutherford is one that stands out, where sales activity has been rising very strongly, starting to translate into really good price growth in Rutherford, as it is in other locations in the Hunter region outside Newcastle. And lastly on my top 10 list, Sebastopol, which is a very affordable suburb in the regional city of Ballarat in Victoria, another one of those Victorian regional locations that's just going gangbusters at the moment, in contrast to what's happening in the capital city, Melbourne. Like Bendigo, a lot of buyers coming out of Melbourne looking for better affordability or better rental yields, or maybe home buyers looking for a different type of lifestyle. You can actually buy very affordably in Ballarat, live there and commute to a job in Melbourne, but you don't need to necessarily, because Ballarat's a very strong and growing economy in its own right. Plenty of jobs being created in Ballarat. So those were my top 10 that I nominated for my interview on the Your Money program on Foxtel at the weekend. So I thought I'd share that with you in case you missed the actual live interview itself on sort of around midday on Saturday. I just want to touch on one other thing before I finish this broadcast. Anyone who's followed my Facebook postings will know that I have a particular view about the way that media is reporting real estate markets around Australia at the moment. The headlines are fairly outrageously inaccurate, unbalanced and unfair in terms of portraying Australia as a country where prices are falling everywhere, which is clearly not the case. We certainly we see that in the latest monthly report from CoreLogic, for example, where 5 of the 8 capital cities have prices rising in monthly terms and in annual terms. And then regional Australia collectively is in the positive as well. But the headlines keep telling us the prices are falling everywhere. So we saw some headlines today which resulted from the OECD doing its the report that it does every 18 months on the Australian economy. Now, that report touched on a lot of things. It talked about the Australian economy, the fact that it's been rising for over a quarter of a century without recession, and how remarkable that is, how remarkably strong and resilient the Australian economy is, and how it's expected to continue to be so. It touched on a lot of things around the general topic of the Australian economy. It also touched on policies towards climate change. And in the course of the report and its discussion, it also referred to what's happening with property markets. And like many economically based reports, it talked about Australia as a single market. But what it said is that Australia is on track for a soft landing. And of course, it's referring primarily to Sydney and Melbourne, where prices, generally speaking, are trending down. But what the report said is that situation is on track for a soft landing, which is what most observers are saying right now. Most sensible, credible, big name analysts and commentators have been saying pretty much the same thing. And then on the SBS News on television tonight, I saw one of their main economists from the OECD and authors of the report saying again that Australia is probably in, referring to what's happening with prices in Sydney and Melbourne. He said Australia is probably in for a soft landing. But the report also suggests that the Australian federal government should keep in mind the possibility that the landing will be not as soft as they're expecting, and it should prepare for that possibility. So, of course, naturally, Australian media being what it is, the headlines today have been shouting that the OECD has warned that we're heading for a hard landing. And they don't say that at all. But you're going to see those headlines, and that's what the headlines will say. But if you actually take the time to read the detail of the article or the report itself, you'll find that what they're actually expecting is quite a calm, moderate outcome, like pretty much everyone else who's sensible and worth listening to and has made some sort of forecast for where our major city property markets are heading. But once again, the problem is the headlines. The headlines are dishonest and misrepresent the actual content of the article or the report that they purport to be highlighting. So, yeah, things sort of panning out pretty much as we see it at Hot Spotting in those major markets. As some of the economic commentators have said in the last few weeks, there's a fairly orderly wind down on prices in Sydney and Melbourne. There's no evidence of panic selling or forced sales, and many of the forecasts are expecting it all to sort of level out sometime next year, probably the middle of the year, and then gradually return to some sort of moderate growth. And that's pretty much the scenario that the OECD is painting as well. All right, that's it for now. Terry Ryder from Hot Spotting signing off. Let's do it again soon.